Hi, my name's Dave, and it's great to have Bill here today. Bill, how you doing, sir?
I'm well, David. Thanks very much for asking. Glad to be here today.
No, really good to have you on here, all the way from whereabouts are you actually based, talking from today?
Today, I'm speaking to you from Toronto, Canada. From time to time, when people speak to me, I'm literally all over the place. Sometimes I'm in London, sometimes I'm somewhere in Europe, and sometimes I'm in the US.
Right, well, we've got you in Toronto today anyway, then.
Absolutely.
So I really wanted to talk about Armada credit, but before we get into that, I was just intrigued about your background before Armada.
It's quite diverse. I've been in the business for some time. Not too many people ask about it, but I think I've had a great ride in the equipment leasing finance space. I started in the leasing space in, I'd say, mid 90s, 1994. I know I may look a little older, but really it was 1994, and I was lucky enough to get in. I started my career in leasing in the collection side and basically worked with customers rather than against customers or fought with customers. I worked with them to create and resolve the issues that they had in order for us to, work together and resolve the issues that they had pointed out to me. From then, I started at a wonderful company called Newcourt Credit Group, which was a Canadian company, eventually became an international company. Newcourt Credit Group was behind Yamaha Financial Services, Dell Financial Services. And interestingly enough, I was a part of a group called the Retail Finance Group. And I started in that group, and basically that group changed the way the industry is done. What do I mean by that? I personally believe it was the foundation of what e-commerce is today.
Wow.
How so is the leaders in my group had developed a system called the Nod. And the Nod was a system that was developed in the industry that allowed, ideally at that time, we were focused on the student market, whereby a student required a computer, a printer, and you have to remember this was the 90s. So, these things were relatively expensive, for a student, let alone for, anybody else. So what we did is we created a client server solution that allowed students to walk into the computer bookstores on campus. And basically, for the price of a pizza, a $20 pizza per week, you could have a laptop and a printer should you need one. The interesting thing behind it, Dave, was that it was the first online credit adjudication and client server. It was client server before it was online. But it allowed a student to walk in and rather than fill out a credit application, submit that application via fax, wait 2 or 3 days, and get a decision. And that decision may not have been, a positive decision based on the student's credit at the time.
Hmm.
It allowed for instantaneous credit approval. So basically, you'd walk in, punch in your information on a computer. That computer would come back, go out, score the credit, come back with an approval, and then basically print off a document, which would be the lease agreement, would allow a student to walk into the store, get credit approved, sign the documents, and leave with his laptop, printer, or whatever else that he was looking to purchase. And that, in essence, turned into a product called Credit Link. And Credit Link was a product that we worked with at Newcourt, and it was the product that basically allowed Michael Dell or Dell Financial or Dell Computers at the time to move forward with Newcourt versus some of the other players. Yamaha, the same thing on the consumer finance side. Over my term in life, I've worked in various different types of industries, one being consumer, the other being commercial, but in various different verticals. IT was one, HVAC is another, medical is another. So over my span and career, can we start that again, Dave? Like that really,
Yeah, yeah.
that was terrible. That was terrible. That was
We'll just
terrible.
cut that bit there, and
Yeah.
then this is a beauty of not being live.
Yeah, like it's hard for me like when I'm doing it. Like if I was speaking to you as a customer, I would be able to tell you no problem. But let's cut and let's restart. So I've been in the leasing industry since the mid 90s. I was lucky enough to work with a lot of different companies. My career at most of the companies was like average between 5 to 7 years. The first company that I worked for was a company called Newcourt. Newcourt is a company that actually developed the first client server and online credit adjudication system, I would say, anywhere in the world. And I think I would be right in saying that's the basis for what is modern day e-commerce. The system allowed for people to basically get reviewed and approved for credit at point of sale. So if you think about it, you would go to somewhere looking to purchase something on the consumer basis, and you would be able to provide your information, and instantaneously, within minutes, today, nowadays, at least it's within seconds, but back then in the 90s, within minutes, it was able to approve you and provide you with the documentation on site so you could walk in, choose your product, get approved, sign the documents, and then basically leave with your product, which was very powerful.
I was going to say 30 years, people listening to this nowadays would just think that's completely normal. But 30 years ago, that was absolutely groundbreaking then.
It was. It allowed us to basically work with large accounts. We had already been working with large accounts. Newcourt, the company that it started with, was an international player which started in Canada, more or less. But it gave me and us the ability to, create solutions for various different customers and vendors that allowed us to provide them with the right solution versus the wrong solution.
Right. Yep. No, that makes sense. And so this is an industry you personally been in for nearly 30 years or so then?
Yeah, worked in. So the interesting thing about me is I actually worked with, companies like Newport, which were non-bank lenders. I worked for manufacturers. I worked for distributors as the leasing rep. One of the manufacturers that I worked for was a company in the medical aesthetic device space, and I was the global director of leasing services. And I stayed there for about 6, 7 years. It was a wonderful time. It gave me a lot of insight. The insight that we have, or at least I have, but generally speaking, the folks at Armada, is the fact that, we're an experienced team. And we've worked for the non-bank lenders. We've worked for banks. We've worked for private finance companies. We've worked for manufacturers, and we've worked for distributors. And I know it sounds really odd, and it may sound like it's one and the same, but really it's not, because each has different needs. And so a manufacturer and a distributor's needs are to sell the product and provide products that are in line with, what they're trying to sell and how it's going to benefit the customer that's purchasing those products. Most products are over 50, 60, 70,000 K US and do require financing. So the one thing that what I found when I was working for lenders was basically they design their products downward. I'm a lender. This is my credit policy. These are the rules of the program. This is how you have to, work with us. Versus understanding how a manufacturer sells. And a manufacturer sells its product based on its benefits, its features, its science, whatever it is that they're selling. But then there's also the idea of a customer who's buying. What are the needs of the customer? How is a customer buying? So throughout my career, I was exposed to all those different ways of purchasing and ways of selling. And that really gave the insight to myself and, the folks that work at Armada on how to actually develop solutions that fit everybody's needs, whether it's the lender, whether it's the manufacturer or distributor, and most certainly taking care of and ensuring that the customer is aligned with the solution that they're looking for so they can make a good decision moving forward using financing. Financing is required in most equipment sales. Most of the transactions are 50, 60, 70,000 plus, and it's not typically the right move to eat away any cash that you may have when you can actually finance it and, have a much better ROI as you finance products.
Right. So basically, through and through finance and leasing background, but seeing all aspects of it from customers to manufacturers to the bank's perspective. which are great backgrounds. And then, so now Armada Credit Group now then. So what was the background of Armada?
So Armada was an idea that we had developed. It's an independent finance company. It operates in Canada, the US, and the UK, currently directly and indirectly in some European countries, primarily the Western European countries. And our goal is to work with our partners. We're primarily a vendor shop, which means that, we work with customers like manufacturers and distributors who have equipment. They want to sell that equipment to the parties who are interested in purchasing. So as an example, in the medical space, you may want to sell equipment to a doctor. Our goal is to create solutions that are in line with the way doctors purchase and what makes them comfortable. When we created Armada was an idea that, we had back in, 2000. We actually established it, registered in 2004, and it sat for a while. And basically in about 2015, 2016, I got together with my business partner at that time, Dan Leibovich. And Dan is both a lawyer and accountant. And I'm sure you'll be speaking to him shortly or sometime soon.
Mm.
And we put Armada together with the idea of we wanted to do right by all parties, especially the end user, the customer, the person who is looking to get financing. What we found in the industries, whether you're in the US, whether you're in Canada, whether you're anywhere in the world, as it relates to financing, sometimes not everybody's as honest as they should be. And Armada was something that we wanted to create, saying, hey, we want to do right by our customers, which are the vendors, and their customers, which are the end users. We've been lucky enough to grow, and the model that we put in place has allowed us to grow and build up our own customer base, who come back to us consistently and constantly because we've done right by them every single time. And that's our goal, to ensure that all parties are treated well and treated fairly and treated honestly. And what that's done for us is it's given us an opportunity to grow and develop. We started in Canada, David, with the idea that we would work in Canada, but that we've done such a good job for our vendors and for their customers, who are now our customers. Those vendors asked us to move to the US, create a similar solution. And then they asked us to move to the UK to create a similar solution. And we've done that to support our customers and their customers, and basically the customers that we currently have in our database who are working with us.
Right. Sounds like you've got a very much a relationship type approach rather than a transactional approach with your customers. It's not just one deal and that's it.
Absolutely. I mean, the goal is to work with customers. If we're providing financing to those customers, we want them to be successful. And that's the most important for us, because as they become more and more successful, they typically grow and they have other capital equipment requirements or needs. And they typically bring us back saying, hey, you did right by me the first time. I'm interested in moving forward with, another device, another piece of equipment. Can you help us? What we do is we try and understand the equipment that we work with. We don't work with just any vendors. We have what I would say is a high standard. We want to ensure that we work with vendors who we know do right by the customers as well. Every vendor, every manufacturer typically does, but it's after the fact. How do you support a customer after they've purchased your equipment? How do you support a customer, or what type of a support is available? Who's selling the device? Does the device actually work? I mean, most do. Most, have science behind them, but our goal is to ensure that the customer has the ability to grow and is buying the right product, and we will help that customer and we will help that vendor, achieve their goals.
Right. So right in thinking it's basically you have sort of two clients. One, say the manufacturer, to help them finance the product for their end customers, or you can go direct to the end customer and do the finance specifically for them. Is that a fair?
That is exactly what it is. So, when we started the business, we started with some people that we knew who were end customers that would come to us because they knew who we were. And then we also started with vendors, which are considered manufacturer distributors of products. And they started working with us because of our reputation, and they knew who we were based on, the careers that we had built prior to starting Armada. So the way we looked at Armada was, hey, we want to do right by the people that we work with. We want to work with the right people, and we want to ensure that we're providing real value. And that's how we've designed Armada upward. We have a number of different partners whereby when we cannot facilitate a transaction, we're able to facilitate it through our partners, syndicate partners or broker partners. We have over 100 years of domestic and international experience in commercial and consumer financing. The team here that we built is an exceptional leadership team, but more so, we're driven by customer focus. So what we would consider our account managers or account executives, they are customer focus driven, not sales driven. So they want to ensure, because one pushes the other, they want to ensure that the customer has a good experience and gets what they're looking for.
Right, that makes total sense. I'm intrigued because you deal with a number of different fields, and it seems a factory might need a piece of plant machinery costing £100,000. A doctor might need some search. It seems very similar. There's a value of the item, and that person uses it. But do you see nuances and differences depending on the if it's in manufacturing or if it's the medical world you're dealing with?
Yeah, I mean, yes and no. It depends on the financial product you're looking for. There are different types of financial products, as an example, in the US or Canada, North America, and similar to Europe and the UK, you have capital leases or finance leases. Those are leases which are amortized to zero, and at the end of the term, the customer would, get the equipment for, a tiny price of $1 or $10 in the US and or Canada. There are operating leases where there's a value attributed to a piece of equipment based on its economic useful life and the portion of use that a customer is using it on. Each customer has different requirements, but each are using financing in order to benefit their ROI. It doesn't make sense for someone to write a check for 100,000, 200,000, 300,000, a million, 2 million, 3 million, and then wait for the payback period. When you finance a product, you're financing it with monthly payments, which are fixed term. We typically don't do variable term, and we do not, and typically the terms can range from 60 months onward or 60 months downward. And the idea is that at the end of that term, you understand what options you have. If it's a fair market value lease, you may have the option to return the equipment and get the latest and greatest device. If it's a capital lease, you would potentially buy the equipment for that, tiny amount of $10 or $1 or whatever it may be. But the goal is to fit the monthly payment and the solution into that customer or into what the customer is looking for.
Right. And so, do you say you don't do variable finance at all generally?
Generally, we don't.
A reason behind that?
There's rate fluctuation, and the way private finance companies or non-bank lenders raise money is a little differently than a bank. Variable would allow for rates to go up and down throughout the term, and it might extend the term based on the way the payments are structured. We typically do fixed term leases. So if you say you want a 36-month lease, it's a 36-month lease. If there's a balloon at the end, there may be a balloon which you would have to pay for or refinance at that time, depending on, how the customer is looking forward to proceed. But the idea is that customers who finance literally can see what's going to happen, not only today, but in 3 years or 5 years at the end of the term.
Oh, yeah. So it's taking all the uncertainties out of the way.
In addition to that, the rate is fixed.
Yeah, no, that makes so much sense, just so they know exactly where they stand there. Yes. And the different approaches with the different industries I was talking about, is there that much difference really between the medical world and, say, the manufacturing world from your perspective?
Outside of financial products, typically no. It's, customer manufacturers and vendors or distributors have products, and their goal is to sell the products to their buyers. It differentiates on what the buyer's needs are. And that's what we always try and understand and focus on. As we get into industries or different verticals or work with different manufacturers, one of the things that we always try and understand is, How's the manufacturer looking to sell the device? What are the features, advantages, and the benefits of it? Because we need to be able to understand that when we're speaking to customers who are looking to purchase that equipment using financing. So we can provide them with good guidance, number one, and help them understand how this product will help them moving forward and all the good things that financing provides.
Right. It sounds like you're much more tailored than I was expecting, directly to the product, working with the manufacturer, understanding the benefits to their end customer, rather than
Absolutely.
off-the-shelf product.
Yeah, I mean, off the shelf is fine, and there's standardization as it relates to financing across the board. But a differentiator between us and perhaps most others, if not all others, is that it's the understanding of how a customer buys in a vertical or in an industry, what their typical customers' needs are in that vertical, in that industry. Do they need minimum monthly payments because the equipment cost is very, very high? Therefore, do we create, some type of fair market value lease with a balloon at the end? Or do we create a term that could be, 5, 7, 8, or 10 years, depending on the product? That way, it minimizes the monthly payment and it gets that piece of equipment and which will make that customer much more efficient and start generating income and profits sooner rather than later. Manufacturers have different needs, so we try and understand what their needs are. We try and understand how their sales reps sell devices so we can be a part of that sale. It also helps us know who our customers are. And our customers are both the manufacturers, distributors, and the end user customer. So KYC, compliance, these are all important things to us. We want to make sure that we're providing good services and the right services to those customers who sell devices and those customers who buy devices.
Right. Yep, makes sense, that whole tailored approach. And presumably that's how the company's been growing. As you say, you started off in Canada originally.
We did. We did.
And the growth, especially over to Europe as well. What was the main catalyst behind that?
So we put together a program in Canada for one of our manufacturer partners, and we did what I would consider a wonderful job. And because we did a great job for them and their customers, and that's one of the important pieces. A lot of manufacturers sometimes miss the idea that they've done a great job for them in terms of helping them provide financing to their customers, but their customers were very appreciative. And most of the comments that we always heard was, these guys are honest. The team at Armada are good people. They're honest. They help us understand what we're getting into and what it means for us, short-term and long-term. So that worked out whereby that manufacturer said, hey, we need your help. We'd like to create something similar because our goal is to ensure that our customers are happy. And it seems to me that, you're making our customers happy with the products and the services that you're providing to them. So they asked us to move into the US, which we did. And we've been doing a wonderful job with them in the US. And they are a multinational player. So then they asked us to help them out and create solutions both in the UK and in Europe. Interestingly, in the UK and Europe, our plan was never to really branch out there. And we said, well, we do have relationships that we can introduce you to. And one of the highest compliments that I think we've received as a company is that the manufacturer basically said, no, while we appreciate those relationships that you can introduce us to, we prefer it if you come in, create the solution, and run the solution from Europe and from the UK.
Wow. Yeah, because I wanted to clarify that because it feels as though they've pulled you into Europe and the US rather than you trying to expand.
Absolutely, they did. And, we're happy about it. It's the best decision we've made together. And it helps us, of course, because, going into a market, you start fresh and sometimes you're not really familiar with the market. As you know, in Europe, and things are different. Leasing structures are different. You need to speak the local language in Germany or in Italy or in Spain or France, wherever it is that, you're looking to operate in. In the UK, there are requirements that you have to understand on the local level. So, it's been great for us to walk in and create the solution around the requirements and rules of each country and the requirements for each customer and what their needs are. And it's different.
Right. Because I can understand that if you're working with a large manufacturer who's selling in Europe or the UK, how you can actually take your products with the manufacturer. But I'm wondering, when you're expanding into Europe, how much of it is expanding on the back of the manufacturer rather than directly to the clients? Is there a sort of proportion?
The great thing about that is that we are able to, so as we open up in a different market, you have to understand and learn the market. So the manufacturer helps you learn the market. You have to hire local people, of course, and those local people understand the market. But starting sales or financing sales from zero is not easy anywhere. Starting sales from zero is not easy anywhere, period. So the manufacturer working with their customers and introducing Armada makes things a little easier.
Yeah, I can see how that's much easier to get started rather than going from a cold start, especially the difficulties of a new country as well.
It is.
So that will be the first step into opening in a new territory, is working with existing manufacturer relationships. Then do you automatically then go and widen out to direct to consumer?
So typically, we do that as we build up our portfolio, and then slowly as we get comfortable with the market, we may speak to other manufacturers in different verticals and try and add more business through manufacturer partners. And then, we will then create a solution as we understand that market to call customers and directly. So direct to business, which would be B2B for us.
Right. Got you. I mean, it sounds like everything's going brilliant, expanding into Europe like this. I mean, how big is your UK, the European operation compared to what you're doing in Canada and the States?
And the States is the biggest market in the world, and we love the States, of course, but we love every market we play in, or we operate in, forgive me. The markets independently in Europe, much smaller, just because of the size of the population, the needs and the demands. US is the biggest market in the world for us and for just about everybody who operates in the US. Canada is also a very, very large market. It's a great market. The wonderful thing about working in these markets, you get to meet such wonderful people. We've been to the US. There's so many amazing people in the States. I love the folks in the UK, the people that we work with, the clients that we work with. I've created new lifelong friends in each of the markets that we work with, and loving it.
Love it. Yes. And so now with Europe there, are you in that position? There's so much more we can do in Europe, or have we got Europe tied up? We're beginning to look further afield now. What are the sort of future?
We would try to go where our manufacturers and our partners want us to go. That's, I would say, the first thought in terms of how we want to grow if we expand geographically. In each of the markets we're playing in right now, we would grow in those markets by adding the various different verticals that we play in. We play in the medical space, green energy, HVAC, commercial, industrial, various different places. Green is a big one for us in the UK, as is medical. So we're slowly expanding, but we want to do things right. And what that means as you enter a market is understanding the market, understanding who you're going to be dealing with as it relates to a vendor or a manufacturer, and understanding who their customers are and what their customers' needs are. And customer need is what drives us. Customer support, customer needs. Because if we do things right for customers, they will come back to us.
Because this is all talking at a very high level at the moment, but can you give us some sort of specific examples of that?
In terms of what?
In terms with a specific manufacturer and how you've actually worked with them on a specific product.
Yeah, I mean, I'd rather not talk about the specific manufacturers or manufacturers by name, but I can speak to, we don't want all our secrets to get out, but in terms of, sorry, go ahead.
I'm just I'm a little bit fascinated when you say green technology, and I was like, oh, exactly how? Um, yeah, just using some sort of examples you could share with us of the sorts of relationships you have and the products that you actually use to finance.
Yeah, so I mean, the green tech is based on energy consumption, obviously, and ensuring HVAC is similar, solar, HVAC, lighting. That's an area that we do well with in Canada and the US and the UK. Our partner in the UK, the gentleman who runs the business in the UK and primarily drives the business in the EU, Stuart McKee, has built the initial business based on green energy, which would be lighting. The efficiencies of replacing lighting or adding new lighting as lighting and technology gets better. All technology eventually gets better. It seems to me that the industries in the world are coming out with better technology every other couple of years. Another technology that we play in is the 3D market or 3D printing market or additive manufacture space. So the technology there turns within 24 to 36 months. Typically, you could buy a 3D printer for a few thousand or a few million, depending on your need, who you are, how you use 3D technology. But the idea is, how do you manage the equipment that's coming out and is turning every 3, 4, or 5 years. And a great way to do that is by leasing it or financing it.
I was going to say, yes, with those changes in technology happening so fast, as you say, 3D printing, 2 years, you could be completely out of date to a certain extent. Is that much more of a challenge from your perspective then?
It is because you ascribe a value to a piece of equipment, and that piece of equipment should have an economic useful life. So the shorter the life, I mean, you could use that 3D printer in another area. It just may not be the latest and greatest thing. You went from printing resin to now printing metal. That's astounding to me. And, so if you were printing resin before and now you want to get into printing metal, or, it's a different business model for the folks that buy 3D printers. You can print much faster now than you were able to print 3 years ago. So you could literally design, upload, and print something, whether it be in metal or whether it be in some type of resin, in a matter of hours versus days.
Mm. Yeah, it's been amazing how the technology's been changing. Yes.
Yeah.
And that's the thing, you seem to have a really good actual understanding of the technology and your manufacturer's products.
So what we try and do is really understand who we're working with, what the products are, what benefits they have to, the customers looking to buy them. It's important to us because when you finance products, you want to ensure that the products are going to last and they're warranted, and there's service components to them. And we speak with our manufacturer partners and our vendor partners. And again, we don't just work with anybody. We work with people that we know, work with products that we trust, and people that do right by their customers.
Mm. And with the changes of technology, are you seeing the actual finance and leasing side of things changing much over the years?
It you could say yes, but it would really depend on the vertical that you're playing in. The idea is to always create, and financing and leasing is driven by the changes in technology, but that's driven by the customer's needs and requirements. So, a newer product will may be a little more expensive. But you have customers that have set budgets. How do you get that higher priced, newer technology into a customer who has constraints or budgets? And that's what changes the financial products of our industry, more or less.
So you're more reacting to the changes in the consumer and the manufacturer as such.
Most people are, and you could say that we're reactive as well, but because we understand and we work with the manufacturers and distributors in those verticals, they sort of from time to time tell us what's coming down the pipeline. And then, we go out and try and create solutions that align with how a customer would look to purchase that equipment using financing.
Right. Yeah, it's just getting back down to that whole partnership approach that you've got, which I really, really love.
Yeah, it's important to us because, we need to understand who our customers are. Um, it's a part of what we do. When you work at banks, at least, a long time ago, like when I started, you didn't get the opportunity to really understand it. And sometimes bad things happen to good people. And our goal is to try and speak to every single customer that, we work with, and understand what their situation is and, what may have happened and, put together the thought of what will and what is happening to them personally at this stage and how, technology or the equipment they're looking to buy would help them moving forward.
Yeah, it's weird that there's so many changes going on, as you say, with your customers on the manufacturing side, and you having to be reactive to that rather than just this is the way we always used to do it, so this is the way we carry on doing it.
Yeah, for a long time, there was a lot of companies try to, at least companies in our space, try and model credit, which is great. Everybody does. We model credit as well. But they automate it. So, a transaction will come in and they will automate the credit scoring process. And it'll say, it comes back with a score of 1, 2, 3, let's say as an example. And if it's not 1, 2, 3, it may be declined. And because companies want to become much more efficient in terms of credit, they base most of their decisions on that model. Because if they stop and they say, well, what's happening with 3 and 4 and 5? We need someone to take a look at that and understand it and, understand what the issues were, what that person was going through at that time. And is there a solution that we can create for that person or that company looking to buy? So we understand the automated credit scoring. Again, we were a part of, what I believe was the first company that ever created automated scoring and online decisioning. But I think something is missed. A lot is missed when you're not speaking or really understanding who the customer is and what the equipment is they're buying and how it will impact them.
Yep.
Or what happened in the past.
Yep, that makes total sense. So more of the future, how do you see the industry changing and adapting with new technology coming in overall, the finance and leasing industry?
Yeah, I mean it's an interesting question. I think people will still utilize auto adjudication or credit scoring, automated credit scoring. But I think what the industry is seeing now is that while you're using the auto credit scoring or the auto adjudication, you really do need to get to know who your customers are, both the seller and the buyer. And there are transactions where we see all the time that a customer may have gone somewhere else initially, and they were declined, but they were declined for a silly reason. One silly reason may be that their mobile phone bill. They may have missed a payment or two, and that may have affected their score, and that score would have affected the overall credit model, the credit adjudication engine. Most are built nowadays to see past that, but back in the day, I could remember people would get declined for a silly reason like that. So understanding, having people look at it, having people speak to the customer, having people speak to the vendor or the manufacturer is paramount to what we do because we really understand who our customers are.
Right. And so forgive my ignorance on this. That whole credit, do all companies use the same sort of credit scoring agencies or just a couple of big agencies there? Or how does that actually work, that underwriting?
There's a number of different agencies that you can use, but they're typically the big ones that you probably know and can list off. Each company may have a manual policy, which doesn't, or some companies have manual policies, some companies have automated policies, some companies have both. I think when the automated credit scoring decisioning came out, Most companies tried to move to that to become much more efficient. But what they found was that they were missing out on a lot of transactions that didn't deserve to be declined or, overly scrutinized. And then they started, like we have, instituting a manual process. But we do it not just on the backside where we're looking at credit, we do it on the front side when our account executives are speaking to, the customers who are looking to lease.
Right, got ya. Cool. Yeah, was there anything, I'm just taking a break a second. Was there anything you wanted to ask about it? In respect, I mean, we've got a lot of background there.
Yeah, I'm not sure, David. I mean, I don't know if I answered the questions well or correctly, but it's funny. I could sit in front of a manufacturer and talk to them about all the wonderful things that we do, but here it's different because I'm not. It's not boxed in my head. So it'd be great if we were filming and I was speaking to somebody else and you could see it, but I don't know how you're going to edit or cut this thing up, or even if you can use it. But right now, off the top of my head, there's nothing. But if anything, this has given me good practice for future discussions with you.
Brilliant stuff. Yeah, because what we normally do, I say this was our first chat, so a bit of background, we can be quite generic in it. So normally for the next one, it's probably best for that I ask people if you get a set of questions you want me to ask you. And so it's very much guided. We can go into the topics that you specifically want to be covered. But for a first go, and just being generic like that, I thought that went really well. You come across really well on the camera, come across very knowledgeable, very confident, very relaxed and calm. Yeah, you come across great.
Thank you, David. That's very kind of you to say. I mean, I'm I guess my worst critic, so I think you're selling. There's nothing wrong with that, so I appreciate it. But this is not the last time we'll be speaking. I think I'll get better and better at this, and I think I'm going to need to do this a little more often because it'll get me out of my comfort zone as it relates to doing things like this. And I've seen the videos that you posted with Stuart, and they were great. So I'm looking forward to being just as good, if not better, than Stuart.
Love it. That's what to go for, definitely. Yes. Cool. Well, yeah, what we'll do then, we'll go and get this all edited for you, and they'll come back with all the video shorts. And then let's just book another time in when you want to have another go. And we'll have some questions for that one and go in a bit more in depth into the fields that you want to go into.
Yeah, I mean, I think maybe April will be good because March typically gets busy at the end of the quarter for us. And you got so many things going, but maybe the first or second week of April, ideally the second week, we should book something. I think you should also book something with Dan. Dan is a wonderful speaker. And he's very articulate. I'm a little blue collar, nothing wrong with blue collar. I love blue collar. But, for me, I always try and do right by the customer, as does Dan, as does everyone else. But it's difficult for me to explain it sometimes. So many things are running around in my head. But one of the reasons, as an example, what I should have said is when we started Armada, my father was a small business person. And I always remember, he always tried to do right by customers. And as I got older, I noticed things. He leased a fax machine. And that fax machine, they told him one thing, but the leasing company, but it wasn't really, the truth. So his payments were off, payments were different. And, he was an immigrant, he was a smart man. He sorted it out and fixed it out afterwards. But what really bothered me watching my father was he always did right by folks, but it seemed to me that some of the vendors that dealt with him didn't always do right by him.
Right. Yeah.
And that always bothered me. So when I said to Mike, as I'm building the company Armada with Dan, I always said to myself, I always want to do right. This company has to be about doing right by all parties. I will never lie to a customer. Sometimes I'll deliver news to a customer that they don't want to hear, but I'll never lie to a customer. And, the interesting thing is that, when we started operating in the UK, Dave, I was shocked because everybody in the UK quotes annualized rates. And I'm like, well, what's an annualized rate or a flat rate? Now, what's a flat rate? And a flat rate, and the reason I was shocked is because everybody does it, or at least the people that I've been exposed to thus far in terms of competitors. And a flat rate is not a true rate. There's no such thing. So, I'm hearing that, someone's offering a rate to a customer of 4.5%, but the Bank of England's rate is 5 and over. So how are you getting money cheaper than the Bank of England's putting out? That doesn't make any sense to me at all.
No, I would agree with you, and I couldn't answer that at all either.
But what I found was it's someone taking advantage of the way people think rates are calculated. So the interesting thing is that, if I were to ask you, I'm going to provide you with a bit of a question. So let's say you're looking to buy a $100,000 device over a 5-year term. And, I'm going to give you a monthly payment. The monthly payment over 5 years on 100,000 would be $2,246.05 or pence in the UK per month. How would you calculate the interest rate?
How would I calculate the interest rate? That's a good question. So we borrowed 100,000 over 5 years. So you're over 60 months, you're paying back £2,224, whatever it was. Do you multiply that out by the 60 compared to the 100,000?
So please go ahead.
And I'll get my calculator in front of me as well. So we've got, did you say the monthly payments will be 2224?
2224605.
224605 times 60. So we're paying back 134,760 or so over the period.
That's correct. That's the total interest amount over that 5-year term.
Right. So so it's a £34,000 of interest you're paying, but that's over 5 years. So do you divide that by 5? And you're making 7% or so?
You would likely divide it by the amount. So what I'll do is I'll jump in at this stage. What we found customers used to do or do when they try and calculate the interest rate is they'll take the monthly payment, which was 224605, multiply it by the term. 224605 multiplied by 60 would give you, 134,762.79 cents.
Yep.
Then they would take that and divide it by the amount that they're borrowing. So that would give you 0.3476.
Yeah.
So now someone would look at that and say, hey, you're charging me 34.76% interest. That's madness. Have you lost your head? And someone would say then, you remember in finance class, you took finance class, right? And if you divide that by the term is 60 months, 5 years. Divide that by 5.
Yep.
What do you get? You get 6.95.
Yes, yeah.
So that's what people believe. Well, that's how people, at least we understand it, that's how people are told to calculate your flat rate.
Yeah,
which is incorrect. The true interest rate on that is 12.9%. And interest is calculated using time value money calculation. So if you go to your accountant and someone offers you a lease and provides you with a flat rate, great. Go to your accountant or call us and we'll verify the rate. We'll tell you what the true rate is. But what we found is, as we operate, people want to know what that flat rate is, but and we'll provide it to them, but we always try and tell them, hey, your true rate is 12.9%, or is 9.9, or is 7.9%. Because when you look at it, I mean, it's interesting. What were we saying? What's the current Bank of England rate?
I was going to say, you lost me a little bit then. I got to how I thought that was like 6.95 by taking the interest that you pay over the 5 years. But you just said the true rate is something like 12%.
12.9%.
So how do you calculate the true rate?
It's based on a calculation called time value money, and that's how you calculate interest rate in finance. So if you look up time value money, so basically someone could say on this, sorry, just getting back to it. Currently, I believe the Bank of England bank rate is 4.5%. So if someone's telling you you're getting 6.95 or lower than what the Bank of England's posted rate is, it's just silly.
The principle of how they can actually lend money lower than the Bank of England rate, but I assumed that was down to the swap rates between the banks, but I always thought it was pretty much in line with the bank base rate.
I mean, so what does it say here? Compared to 4.75 yesterday and 5.25. I've just looked it up online, but basically there's no such thing as a flat rate. In leases and most financing, if you wanted to pay out, you would pay out on the balance of the payments. Sometimes lenders will provide you with, a slight discount on the remaining payment or the remaining interest portion of the remaining payments. So when you look at it, you're paying the full interest amount over the course of the term anyways. But the calculation to use to work out a rate is time value money. You could literally look up on Google time value of money, or how to calculate an interest rate on a commercial basis. There's other tricks too. I mean, and this is what we dislike about some of the folks and some of the offers out there. A rate is also affected on when you get your money.
Mm-hmm.
After you put it out. So as an example, calculation might have an advance payment, or a payment calculated in advance, or a payment calculated in arrears. What's the difference? The difference is typically a month. So think about it this way. You go out and buy something today on your credit card. Your payment is not due today or tomorrow or when you've received the equipment. It's typically due 30 days out, or your next statement date.
Yeah.
So that would be considered a payment in arrears. So if I provided you with financing, you received your equipment today, literally today, you've confirmed it. Yeah, Bill, I've received my equipment. Everything is here. Started the lease because you provided us the confirmation of and acceptance. Your first payment would typically start either the interest clock or the payment clock would start that moment. So that's calculating payments in advance.
Yep.
If your payment was 30 days out, that's calculating payments in arrears.
Yeah, technically there's an argument you're in arrears already. You've got the equipment, not paid a penny.
Yeah, you haven't paid, and this is aligned with what the bank offers, or the lender offers, excuse me, not the bank, but what the lender offers. What some folks do is they actually calculate your payment in arrears, but they take your payment in advance, and that increases the rate, and you don't even know. So if you were to go online and punch in, this is the amount I want, this is my monthly payment, most online calculators will calculate in arrears, not in advance. Now, the difference isn't enormous. It could be anywhere between 50 to 80 basis points. So, less than 1%. But for me, if I'm a consumer or I'm a business and I'm borrowing money, I want to make sure that I'm dealing with someone who's being honest with me. And if there's a fee, let me make that decision on whether I want to pay it or not. If the rate is 8%, let me make the decision based on a rate and a monthly payment being truly calculated at 8% versus 4.5, which is not a real rate. That's one of the things that drives us at Armada. We really, really want to make sure that we do right by customers always. And if I do right by you, if you're a customer coming to me now because you've been introduced to me by a manufacturer, David, I want to do right by you just because that's who we are. But also, that manufacturer has put their reputation on the line by introducing you to me. So if I'm taking advantage a little bit here and I'm taking advantage a little bit there, and you go to your accountant one day and your accountant says, well, you remember when someone told you that it was 6.5, it's actually not, it's 12.9. How's that going to make you feel?
Yeah. You're just going to feel ripped off, aren't you?
You are. And that's the thing, like to me, that bothers me a lot. So that's one of the reasons why when we started operations in Canada, the manufacturers, the vendors that we were working with asked us to help them in the States. And then they asked us to help them in the UK because we're honest. And that's a big thing I always want to ensure that people understand about Armada. We do right. Yeah, mistakes happen sometimes, but they're not intended. Someone may have had a bad keystroke and you have documentation, the keystroke was wrong. They may have inverted a number. That could be a positive, whereby it's a lower payment when really that payment should have been this, or it could have been a higher payment and reducing the payment to what it should be. Stuff like that happens. But, when you're speaking to customers, it's important that you always tell the truth. And that's one thing that we want to ensure that we convey to everybody, because that's what the manufacturers and our partners expect. And that's what brings folks back to us, is that we're honest. If you've had some challenges in the past as it relates to credit, David, you know it. So, when you submit a transaction to me, from a business perspective and, the financials may not look right or your accounts may not look super healthy, we'll try and understand why, and we'll try and create a solution for you. Doesn't mean I'm going to get you the best rate in the world, but it does mean that I'm going to work very diligently, and so is my entire team in the US, Canada, and the US, and the UK, to ensure that we get you the best solution that we can get you. And when we deliver a solution to you, you can know that we're being honest about it, and we'll tell you how it works for you should you want to know.
Right. And it's those things that keep relationships, isn't it?
They do. And that's one of the reasons why people come back to us. So yeah, we're introduced to customers who are looking to buy equipment by the manufacturers and the distributors that, we work with, we partner with. We vet those manufacturers, we vet those distributors, and we ensure that, what they're offering is true, because it's our reputation as well. But the customers, after we finance them, come back to us because we're honest, and we've always been honest. I would rather a customer not move forward with me because I've told them the truth versus move forward with me because I've lied to them.
Yeah. The reputation is the most important thing we have in life, I think, at times. And it takes a lifetime to earn it, but it can be lost just like that.
It is. And, the thing is, financing is very confusing, and it's confusing to everybody. Financing is not easy. I mean, just like we talked about in terms of calculating what we understand the flat rate calculation to be, that's how people calculate interest, but it's not correct. If someone wants to understand what the true interest rate is, they have to use a calculator that provides them with the ability to calculate based on time value of money. You can Google time value of money, or calculate my interest rate on equipment, or what's my payment going to be on this amount. With Google, you can call us. Whether you're in the UK, you're in Canada, or the States, we'll work with you. Even if you don't move forward with us, doesn't matter to me. What matters is that, people are making decisions that are right for themselves.
Right. Is that easy to briefly explain the time value money calculation?
For someone like Dan, yeah, for sure. I mean, I could show you an example, no doubt. But basically, when you think about it, and this is how I look at it, and it's really a simplistic way of thinking. Your money today is more important or more valuable than it is tomorrow. So if I give you $1 today versus give you $1 in a year, what can you do with that dollar today?
More than I will be able to in a year's time because it would have deflated.
So that's the value of time. Time is the only thing you can never buy more of.
Right. Okay.
It's the only thing you can never buy more of. I saw something, someone sent me Instagram or a video on YouTube, and it was someone saying, I'm going to write you a check for $10 million today. Would you accept it? And the person said, yes, absolutely. But he said, there's one caveat. What's the caveat? You die tomorrow. Would you take it?
No.
That's the value of time. So time value of money is based on what you can do with your money today and how interest accrues over that period. So if I gave you $1,000 today, you can invest that $1,000, generate income from it. You can buy something that will help you generate income from it. If I give it to you in a year from now, it's not as valuable as it is today. That's the simplest way I can sort of explain it. And hopefully that helps. That's helpful, at least a little.
Suddenly, when you put in inflation or deflation into the equation, I'm so like, yeah, suddenly that's getting right. I can understand why it's not making sense to me up until that point. Yeah, I'm going to go and have a Google on that and find out more about it properly because I've never heard it being explained like that before at all.
Yeah, I mean, I'm happy to provide some examples to you, on the next call, but, it'd be interesting. You could ask Dan as well. Dan would be great at explaining it. Not that I'm not. As you can see, typically I fumble about until I get passionate about something. And the thing I'm most passionate about is I want to ensure that our customers, whether they be vendors or whether they be end users, who eventually will turn into our customers, are treated right, treated fairly, and treated honestly. That's what my reputation is based on. And that's the only thing I was born with, and that's the only thing I'll die with is my reputation.
I was taught a story a long time ago. I used to work at Lloyd's of London, the big insurance market, and our chairman, Robert Hiscox, his view is, look, you're going to go out there and hopefully you're going to make me lots of money. But, we're going to lose money every now and again. And that's life, that's insurance. But if you ever lose my reputation, that's the one thing we'll never get back at all. And it was the only company I've worked for and known where the reputation was actually much more important than the money. And it's such a beautiful company to work for. Just such a lovely philosophy as well, where your reputation is the most important thing, not the balance of the bank account.
Absolutely. And doing right by folks will actually bring business. That's what we firmly believe in. So, your reputation will drive people to come to you because it's a good reputation. And you want to do right by folks and you want to always be honest with folks. I believe most people are like that, even in our business, in our industry. There are some bad players, but there are bad players in every industry.
Yeah, very, very true.
If you look up time value of money online, it says the time value of money surmises that money is worth more now than at the future date based on its earning potential. Because money can grow when invested, and delay is a lost opportunity for growth.
Yeah, I can see that. And also when you just say the date the payment is made on something, if you're paying in arrears or in advance, again, that actually affects your interest rate, which had never occurred to me at all.
It does. It's a slight effect, but it's an effect. And it's an effect that works in favor for the folks that are putting the money out. So literally, it can be the difference between me telling you that it's 7.59% versus 8.1%.
It's weird, isn't it? But again, just structure, just slightly different. Most people would never notice. And as I said, it never even occurred to me there would be a difference in interest rates if you were, depending on when in the month you were paying for it.
It's true. Well, what drives interest is both the rate, but more importantly, the time. So one of the things that people should be aware of is while you want the smallest monthly payment you can possibly you can possibly get, typically most people choose the lowest monthly payment option. So let's say in a 5-year term, you have an option from 2, 3, 4, 5. Sometimes a 2-year or 3-year term may have a payment that's too high based off of your needs and your budgets. A 60-month term is very good because your payment is lesser.
Yeah.
However, the longer you go on a term, the more interest you pay, even if the interest rate is the same in terms of interest dollars. So if you can say, rather than a 60-month term, a 48 or a 41-month term, you will save money in interest. So as an example, we did 12.9, which is not a rate that we put out, but I was just using that as an example. But let's just do 8.5. 8.5% on 100,000 over 5 years gives you a monthly payment of $2,037.22.
Yep.
If you multiply that by 60 payments, which is 5 years, that's $22,233 in interest over and above the purchase price of 100,000. Now, when you take 22,000, you divide it over 5, it's reasonable because you're using it for 5 years. And you don't have $100,000 available today, to put out there. And if you did, you can invest it somewhere else and gain more money than you're paying in interest. And of course, you have tax advantages as it relates to interest as well on a lease. But if I take that same payment, so that same amount, same interest rate, 8.5%, and I move it to a 48-month lease term, so 1 year less. Now your payment is $24.47 for 49. So if I multiply that by 48, your payment has gone from $22,000, the interest portion, $22,000 to $17,479. So you've saved money, same interest rate, shorter term.
Of course. Yeah. Yeah, it makes sense when you explain it, but yeah, hadn't it occurred to me to think of it like that?
Yeah, I mean, the shorter the term, you can have the exact same rate, but the shorter the term you finance for, it will save you money on interest dollars. And that's what people should focus on as well. Not just interest rate, but what's the term and how much dollars or pounds am I paying out on the transaction over the life of the term. So if a 60-month term monthly payment is comfortable for me, can I afford a 48-month term or a 41 or 36-month term? The shorter the term, the better the advantage without even changing the interest rate. You just pay less in interest dollars.
Yeah, well, I think a lot of people think, well, the interest rate's the same. I'll just do it over 5 years rather than 4, and doesn't even cross their mind at all.
But you pay more in interest, and that's fine. Like a 5-year term is okay. Again, if you have $100,000 today, it's worth something, but it's probably better to keep your cash, for an economic slowdown. I mean, I think in the US and Canada, and I believe in the UK, people would describe the current situation as a bit of a slowdown. So it's great to keep it. You can keep it for your operating costs, expenses. You can keep it for marketing, and you can finance it. You can finance the purchase rather than spend that 100,000 or that 50,000 or that 20,000, because it puts you in a much better position, especially if you're looking for credit.
Yep. No, it makes total sense to actually keep the money yourself, invest that, but use the finance for the actual item. Yeah.
Yep. But when we started Armada, I mean, these were the principles that we talked about, ensure doing right by people, trading fairly and honestly, working with the right vendors, and developing solutions that customers would be aligned with and would help them grow. And we don't just work with customers that are easy in terms of credit. Our goal is to help people, period. You may have great credit, you may have good credit, you may have okay credit, you may not have okay credit. but there's reasons to everything. So like I said earlier, bad things happen to good people. We try and help, good people move forward with their lives and their businesses by making the right decision using financing.
Yeah, and actually really understanding the situation. Cool. Oh, love it, Bill. Really interested chatting to you about this.
Yeah, I mean, there's so much more, but David, it's a great industry to be in because you meet so many different people, whether it's the end user, whether it's the folks at the vendor, they're just wonderful people to work with and, get to know. And, when you do right by the people, relationships are always good. I'm glad to have met you, of course. You made it easier for me, especially now towards the end to speak. You know what I mean?
Absolutely, yeah. And at the end of the day, people deal with people, don't they?
They do.
I've always felt that as well. And it might be a business to business thing, but it's still people. And if you don't treat people right, then it makes relationships a lot more difficult.
100% it does. It's about comfort. So I'm comfortable in speaking about helping people because that's what we do.
Mm. Yeah, love it. Love your approach to it as well. It is refreshingly honest and open and true.
Hopefully, I've given you enough to work with now. You may have to edit some pieces. It's fine. I'll wear the same suit next time just in case.
I was going to say, yeah, I didn't stop recording actually, so there might be some other bits there we've got in there. So
That's good at least. At least I'll sound okay in some bits.
no, honestly, you do come across really well on the camera.
I think it's great. I mean, I'm getting more and more comfortable. So, the idea is when you talk in a structured manner, for me, it's like you want to say the right words. You want to use the key words or the hot button words that everybody's using. And, you try and do that and, you kind of sort of fumble about. But, when you're able to speak openly, loosely, it just comes out easier, of course. Like, when you asked, what happened with Armada, we started really in 2016. Dan and started the business. I came aboard just a little about a year afterwards, even though we had registered the business back in 2004 and it was sitting on a shelf for a little bit of some time. The reason why we didn't move forward in 2004 was because we both had families and we had what we thought what was good positions. And when you have families, you have children, you have expenses, school being one of them. I can report now that out of my two children, one is cash flow positive. He's finished school out of the house, so all is good. The other B finished school, I think, this year, and so he will start to become cash flow positive, towards the end of the summer. So, these are the things that we sort of were waiting for before we started Armada. Plus, it gave us the opportunity, the experiences. We wouldn't be able to start Armada without the experiences and the people that we've met throughout our career. And that's, a big statement for me to say because you learn a lot throughout your career. You learn how to deal with people. You learn the different industries. You learn how people buy. You learn how people think. And that's an important thing when you're offering a product, whether it be a widget or money.
Absolutely, yeah. A lot of people used to ask me, "Oh, Dave, don't you wish you got into property earlier?" It's like, well, 10 years earlier, I wouldn't have had the same knowledge I've got now. I wouldn't have the same experiences. I wouldn't have made the same mistakes and same learnings. And it's one of those lovely fairy tale type things. Oh, yeah, I should have done that 20 years ago. Very different person 20 years ago.
Yeah, no, absolutely. I mean, I was a lot handsomer at least, and not as heavy.
Oh, well, you're doing better on the hair front than I am anyway, I must admit.
Yeah, I mean, I went to the salon this morning to ensure that I looked right for the interview today. So, that's an important piece for us. But it's good. It's good. But I'm really happy with what we've built thus far. We operate in the various different countries directly and then indirectly in others. We help people. We're in business, so we do make money. That's our job and our goal, but we do it the right way.
Ethically and morally correct. Yeah. Cool. Love it, Bill. Really good chatting to you, sir.
Dave, the pleasure was mine. I look forward to our next chat. Let's try and set something up for April because now I'm more comfortable. Now I can speak to you without you saying, "Well, this guy's a complete," can't get two words out properly.
As I say, yeah, once we do the first one, everybody, you get to know each other a bit. It does get a lot easier. So, yeah, I'll get some dates down when we're available in March and April over to you. And just, yeah, book in whenever suits you. Yeah, April when it's a bit quieter for you.
Thank you so much, sir. I really appreciate it.
Brilliant. No, really good chatting to you. And I shall see you on here soon.
Yes, you're a gentleman, sir. Thank you. Have a great today. Have a great coming weekend.
And you, sir. All right, then.